Australian economic growth has eased to its slowest pace in 18 months. The housing market slowdown is partly to blame, just as politicians debate the impact of negative gearing policy on prices.
The government is insistent that Labor's policy to restrict negative gearing to new homes and increase capital gains tax will hit property prices.
So the Labor Party have come up with a policy when the property market was going up. Now the property market is coming down.
But it's been revealed the government may have overstated that impact. In response to an email from then Acting Treasurer Kelly O'Dwyer's office in January, Federal Treasury said, "We did not say that the proposed policies will reduce house prices. We said that they could put downward pressure on house prices in the short term, depending on what else was going on."
The government tried to use Treasury advice falsely to say something different. It's good that the truth's come out.
Still, debate rages on the exact impact of reducing incentives to purchase property for investment purposes.
Especially for the younger age brackets, it definitely will lessen interest and therefore will lessen prices.
I don't see it causing a collapse in prices, but it obviously feeds in at a time when the property market is already weak.
Reserve Bank Governor Philip Lowe has acknowledged that weaker prices are contributing in part to consumer spending decisions. He's betting on a fall in the unemployment rate to balance the equation.
We're expecting that as the labour market tightens, wage growth will increase further. In turn, this should boost household income and spending and provide a counterweight to the fall in housing prices.
The housing market slowdown is having an impact on economic growth, with today's national account showing a 3.4% decline in dwelling investment in the December quarter. All up, our economy expanded by just 0.2% in those 3 months to be up 2.3% for the year.
This probably has further to go as the housing downturn continues to feed through the broader economy.
Shane Oliver says while there is a risk of a recession, especially if the job story being sold by the Reserve Bank doesn't read well,
I think it will be avoided because the Reserve Bank will cut interest rates. We'll probably get tax cuts or some sort of fiscal stimulus around the middle of the year.
Ricardo Gonçalves, SBS World News.